A very strong start for the Indian market as global equities rally on lower than expected US inflation print. All sectors trade with gains. The IT index with outsized gains following Nasdaq's tearaway rally. The Nifty Bank 2 hits life highs while broader markets relative underperformers today.
Zomato reports strong operational performance in the second quarter. Even as growth slows, the company maintains a guidance of an EBITDA break-even in the next 2 to 4 quarters.
Apollo Hospital surges after a strong second quarter. Revenue growth and profit beat estimates while occupancy rates also rise. Importantly, the management tells CNBC-TV18 that they target occupancy levels of 70% this fiscal.
Bata trades weak in a strong market after second quarter numbers miss profit and EBITDA estimates. Trend 2 trades lower after margins slipped nearly 500 basis points in the second quarter.
The other one which is underperforming today is Muthoot Finance, down 3.5% as their second quarter dispersals disappoint. AUM growth too is the lowest that we've seen in the last 20 quarters. The management of Muthoot Finance will join us shortly on the show.
Hello and welcome to Chartbusters. Well, it's turning out to be what a session. The Nifty Bank is at lifetime highs. The US markets, it is courtesy the US markets and the inflation print, which we've been talking about through the week, and came in at 7.7% versus expectations of 7.9%. And that really fueled the best one-day gains that we've seen since 2020 in the US markets. And that has obviously trickled on to most of Asia as well as India as well. So as you can see, the Nifty up over 250 odd points. We have the mid-cap index, which is rallying around 100 odd points. Not as much in terms of gains, but nonetheless, we'll take it with both hands. We do have Vishal Malkan, who's joining in to discuss the technicals for the market. Vishal, hi, welcome to the show. Well, you've joined us on a very strong day for our equity markets. So tell us, what would you be strategizing? What are you telling your clients this morning?
Hi, good morning. And I think this is a strong breakout with a lot of volume, and the patterns which are made on daily and weekly charts, especially on a Friday when we have a strong move. It's a very good sign for the market. Nifty and Bank Nifty, they are closing at all-time high, which I think opens up a lot of room for upside, which another 5 to 7% move in indices is not ruled out in the next 4 to 6 weeks.
5 to 7%, that would mean that we go to all-time highs. However, Vishal, we are facing some sort of congestion around this 18,300 to 18,400 zone. So it would be important to see whether we do break out above that in the second half of today's trading session or not as well. Individual stocks, how would you position yourself in those?
Of course, the flavor of the day or next week would be IT stocks, because there's a strong reversal coming up on Nasdaq as well as in Indian markets. So my top pick for next few weeks would be Wipro and Tech Mahindra, which are making a base and breaking out from that base today, and for another 5 to 7%. And of course, the other sector which I would look for is metal, and in that I look for SAIL as a strong contender for a move for 100 rupees as a target.
Okay. All right. I just wanted your thoughts on a couple of big movers this week and how you would approach them probably technically from these levels, and probably not connected to what's taken place in terms of the rally that we've seen globally. For example, Divi's Labs, which has lost around 12% on a week-to-date basis. That's because of earnings, and maybe even an outperformer such as Britannia on the upside, which has gained close to 9% on a week-to-date basis. Both these stocks, how would you approach them?
I think Divi's Lab was finding it resisting to the levels of 3,800, 900, which was a strong resistance. And from there, it gave a big downward move, which we call as a loud move. And it has broken the supports of 3,500 also, which means it goes into an intermediate downtrend, and it will remain in that downtrend to consolidation zone for next few weeks or maybe months. So from a buying perspective, of course, I would avoid this and look for support levels near 3,000 levels. And as far as Britannia is concerned, let's look at Britannia's chart, where I think there's a great breakout above 4,000, sustaining above that with high volume near the highs of last two years. I think that's good pick for another target of 4,300 to 400 as a momentum buy.
All right, we take that point. Thanks a lot for that, Vishal. We will touch base with you later as well. But let's shift focus to our special segment where we get you a few ideas for profit coming in from our colleagues at Money Control Pro. Nitin Agarwal joins in.
So the company that I have chosen is Minda Corp, an auto ancillary company. First, let me touch upon its Q2 numbers. On the back of a strong demand coming from the commercial vehicle segment and export market, Minda posted a year-on-year growth of 14% in its net revenue, and it reported highest ever revenue in a particular quarter. Further, revenue received a boost from an increase in the contribution from commercial vehicle segment. It is noteworthy that despite the significant rise in raw material prices, the EBITDA margin remained above 10% and came at 10.8%. Now talking about the outlook. The company generates around 60% of its revenue from the two-wheeler and passenger car segment in Q2 FY23. With the easing of semiconductor chip shortage, these segments are expected to witness a significant surge in demand. Further, with the pent-up demand and demand rising from the reopening of colleges, schools, and offices post the pandemic, these segments are expected to see robust days ahead. With the broader economy recovery, we believe the CV segment is expected to outperform other segments. What makes MCL different from other auto component manufacturers is the unending desire to innovate and come out with the new products. The company has been working on various new areas to widen its product portfolio. Lastly, the company is currently trading at around 15.5 times FY24 projected earnings, which we believe is very reasonable for long.
Okay, all right. On that note, we need to take a short break, but do stay tuned. We have one of the top companies in focus on account of their numbers, Muthoot Finance. We'll be talking to the management on what was a weak set of second quarter numbers. On the other side, George Alexander will be with us. Stay tuned.
Welcome back. Let's talk about the stock this morning. It was a weak second quarter for Muthoot Finance. The AUM growth came in at the lowest that we've seen for the company in the last 20 quarters. And on a year-on-year basis, it was also led by some rise in gold prices. George Alexander, who is the MD at Muthoot Finance, now joins in to discuss these earnings. Thanks a lot, Mr. Alexander, for joining in. Just wanted to understand with regards to your AUM growth going forward. It's at a 20-quarter low. So what can you talk about this number going forward? And importantly, is it because you're losing some sort of market share to banks who are also getting aggressive in gold loans?
Yeah, thank you. You're right. In the last quarter, we had lost, our AUM came down by about 1,000 crores. But in this quarter, it has gone up, quarter on quarter, it has gone up by about 500 crores. So we are seeing a small increase in the AUM growth. So that's a good part of it. So we should see this going up in the next two quarters, quarter 3 and quarter 4. We should see AUM going up. Now, your second question was about the competition or banks also. See, now in the last 3-4 quarters, banks have started entering into the gold loan sector in a big way. Certainly, they are also doing gold loan. So please understand that banks have totally about 60 to 70,000 branches all over India. Muthoot has not only 5,000. But still, if all of them are doing some gold loan, there should definitely be an increase in the gold loan for them. But having said that, the market is also increasing because we haven't lost our AUM. We only the growth momentum is slowed, but then the AUM is still intact. That means certainly that there is still demand for gold loan. And if banks have done well, it is the new customers who are coming there. So the market is widening, and that definitely is good for the industry.
Can you quantify, Mr. Alexander, how much you probably have lost to banks in terms of business in the past 2 quarters?
Man, I don't think there is nothing to say that somebody has lost, because most of these loans are very short term. It is 3 months, average is 4 months. So it is not just somebody who has taken a loan from us. He comes back again also. But new customers, certainly new customers come to us. New customers go to banks also. Probably the number of new customers going to banks would have been higher. It's not that some customers have left us, because these are all small loans, very short-term loans.
Okay, but like you mentioned, the entire space is getting more competitive with the banks. So is there some amount of pressure when it comes to offering customers teaser loan rates? How much are you offering in terms of teaser loan rates as of now in order to probably attract customers? And what is this doing to yields? Can you just explain to us these two metrics for you?
Yeah, I think it is definitely, we are not that teaser rates were there always. Even for decades, we have been offering different rates, differential rates. But we offered very, very low teaser rates in the last year. And that was actually had impacted our yields. that is very, very low teaser rates, below 10%, etc. Now we have now stopped at very low teaser rates, but even now we have differential pricing based on geography, on the many other factors. We have differential pricing, maybe the geography, the amount of the loan, etc. So today also we have, but we don't have the ultra low teaser rates, because when we did the very ultra low teaser rates is when our yields got impacted. So yields came down. But now that in the last 2 quarters we have not stopped this, those low teaser rate loans have actually gone away from our books, and the new ones are coming. So our yields, which was about 17.3 last quarter, has now inched up to 17.4. And also our net interest margin is also at, net interest margin is now at 11%. These two are decent numbers, and I'm sure going forward, this will slowly be inching forward.
Your numbers going, then you said that these are likely to slowly inch forward, inch higher forward. Quarter on quarter, your AUM growth was 1%. You said that the growth was coming back, albeit at a slower pace, etc. Can you give us a sense of expected loan growth in this year? And NIMs at the peak were around 16, 17 odd percent. Now they're around 11 odd percent. What do you end this year with in terms of both loan growth as well as yields, NIMs?
Yeah, loan growth, we had given a guidance of 10 to 15% or 10%. I think we should be able to do at least the 10% by the end of this year. That is about the loan growth AUM. But NIMs, I think it was about 14 to 15% was on some peak time. That is only one or 2 years or 1 or 2 quarters we got that. But on a steady state, we were having about 12, 13. Now it is 10 to 11. I think the 10 to 11 can go up a bit, but probably may not reach the highest level of 14, 15, etc. That is only in a special situation in a few years back that we got that very high NIMs. Upwards of 10, 11, etc. is, I think, a good NIMs for such company, because here our operating costs are higher. That is why the higher NIMs are required.
Okay, all right. Mr. Alexander, I wanted to just touch base upon your housing finance subsidiary, because your assets under management there were down around 13.5% year on year. Your gross NPA has moved up. I mean, it's marginally lower on a Q1Q basis, but year on year, or rather it's moved up on a Q1Q basis. 4.3% is where it stands. Can you tell us what's taking place in the housing finance subsidiary? Are you seeing pressure in terms of gross NPAs? And similarly with your MFI also, you've seen a worsening in asset quality for the 3rd quarter in a row.
Yeah, about the housing finance company, yes, we had 2,100 crores of assets under management at one time, but during the COVID and after that, we were a little slow in our disbursements. Now the disbursements have started picking up, and we should see it growing slowly in the asset side itself. About about the microfinance. Oh, sorry, I was also talking about the quality of the assets. The NPA ratio was higher. It was because the new NPA recognition norms kicked in last quarter. That is why this time it is a little high. But I think it is under control because we have a very good loan coverage provision also.
So what kind of NPA will you do going forward in this business?
So in this, probably in the gross NPA should come down from whatever it is, about 4 to maybe 2.5 to 3 by the end of next 2 quarters. That's what we expect the net NPA, gross NPA to be in the housing finance sector. And please understand, this is not the usual housing finance. This is the affordable housing finance, where the quality of all the things are much lower than whether the asset, the borrower, etc. Definitely lower than the best of best housing finance. As far as the microfinance is concerned, I think compared to other similar companies, our PAR ratio and also the NPA is far better than many others from the industry. I think we are on track there. It is doing well. Disbursements are so nice. The backlog of the what should I say, the NPAs which were there during the COVID time, it is all behind us now. There are very little more write-offs to be done. So I think that is going places.
Right, we take that point. Thanks a lot for joining in, Mr. Muthoot. As far as the business is concerned, the outlook that you're giving is that things are looking better from where they are right now. But it'll be difficult to be you at a situation where, there is a fair amount of competition coming in from banks in your core business. And at the same time, you are diversifying in businesses which have other financiers who are a lot more, efficient or at a much better place of strength as well. So it'll be interesting to see how things pan out. Wish you good luck for the same as well. On the other side of the short break that we're going to take right now, we will have the management of AkzoNobel, the makers of the paint brand Dulux, on the other side.
Welcome back. Well, let's get talking to another company then. AkzoNobel, the paint company, is in focus. It reported what was good revenue growth in the second quarter, while margins saw some amount of pressure. Rajiv Rajgopal, the managing director of the company, is joining in to discuss their second quarter performance. Mr. Rajgopal, hi, welcome to the show. I just wanted to start by asking you about demand as a whole. You've shown revenue growth of around 25% on a year-on-year basis. Can you break it up for us in terms of what the consumer or retail-focused demand was this quarter, and how much of it was from the industrial business?
So good morning, Ekta. Good morning to you and Mangalam. Wonderful to be back on your channel. Yes, last quarter was quite an excellent quarter. We've seen secular growth, to be honest. We've seen high double-digit, 25% odd growth. So if you look at the decorative paints business, it was pretty much in line with the overall growth. So actually, all the 5 businesses were within a couple of percent points of each other. So, a range starting from about 23 to about 27, with one of the odd businesses even touching almost close to 30%. So it was indeed a very strong quarter. Coming to your question in terms of demand, so obviously the demand was fairly robust. Having said that, October was a bit tepid, primarily because of monsoons, which sort of impacted. However, the last quarter, I think I must say that I was pretty pleased that the strategy that we've sort of outlined for India over the last couple of years was being executed well.
Right. Just a couple of numbers from you, Rajiv, would be helpful. You said in your presentation that most of the growth this time around was price-led. So how much of that was volume-led in the second quarter? And, your market share, because everyone else have been saying that they've increased their market share. This morning we had Berger as well saying that they've increased their market share by about 80 basis points. So where does your market share stand at currently, and the volume growth in the second quarter?
So, Mangalam, let me first take the question on volume. We've had a high single-digit volume growth. The price growth is quite uniform across the industry now. So pretty much, hence, if you sort of derive our number, market share is a derived number. Now, with all the results getting reported for the industry as of yesterday, clearly we've gained market share, right? The reason we don't sort of really talk about it is, remember, we are the number 4 player in the industry, and we're really clawing our way back of some market share that we had lost in 2017, 18, and early part of 19, really. Where do we stand? We are getting now close to 5.5% to 6% on the paints business, about 7.5%, 8% on the overall business. But really, we've still got a long way to go. Yeah. From my perspective, I think what really stands out is that all the businesses, whether it's decorative paints, automotive, marine and protective, the powder business, and industrial coatings, all the 5 businesses grew very well this quarter. And we've seen that after a pretty long time. So really glad that the strategy seems to be working. I think we have to be persistent about it, keep our eyes on the ground, make sure that we are continuing to execute it. Yeah, and obviously there will be the occasional bump on the road, making sure that we don't sort of question strategy when we have the bump on the road.
Okay. Overall, in terms of marketing spends and advertising, we just spoke to Berger Paints just a couple of minutes ago, or maybe an hour back, and he mentioned that there's probably not much need, simply because the number of players remain the same. The competitive intensity is within this entire group of players. What is your sense in terms of ad spend? It's around 3.5% to 4% odd. Do you feel a need to increase it? What is your strategy there? How would it impact margins in any way?
So, Ekta, to be boringly consistent with what I've said prior to Nigel and Mangalam in my last interview, we've said that we would take it up to 5 to 6%, and we are pretty much on it. If you really look at the why the revenue growth didn't completely translate into an EBIT and sort of growth is primarily because last quarter we actually overspent on advertising, and that's a conscious call because after a couple of years we've got some very good creatives. Our flagship brand Dulux Velvet Touch was on air. We in fact made it a point to also be on Asia Cup. So really we are right now making sure that the brand recall, we get back to our old days of glory, and that's something that is going to be a continued journey. We've got more coming up in the quarters ahead, and you will see that as we move forward. But really, differentiating our brands, making sure our propositions speak to a consumer, and making sure we get that customer connect is an ongoing journey.
All right, since you alluded to the last conversation that we had, let's take it from there itself. The last time you joined us, Rajiv, you also said that by the fourth quarter, your margins will be back between the 15 and 17% range. Currently, it's about 11.5% in the second quarter. Do you stand by that? And, by the end of this year, how many tinting machines and dealers would you have added?
So, Mangalam, if you look at it, I think the variable, and I did mention it last time, is all the external factors. Yeah. So while crude has slightly corrected, I did tell you that, look, there is a Forex impact too. And really, it's becoming very difficult to exactly predict when. We are seeing an improvement in the margins, by about a point, 2 points that you've started seeing. But, again, it's very early days. Our endeavor and intent is to get closer to the 15 first, right, before when I give you a range. So, yes, I do see that, look, it may be first a 13 to 15 and then a 15 to 17 going forward. But look, that will come in. I think for me, really executing the strategy well, getting the right top line growth, gaining back the confidence on the brand Dulux and all our brands, International, Interpon, is really what the need of the hour is. And I must say the teams are doing an excellent job, as are reflected in our numbers in the last many quarters. This is almost the 8th or 9th quarter of high double-digit growth, and you've seen that. So really, I think we are focusing on the execution of our strategy. On tinting machines specifically, look, we add typically approximately about anywhere between 1,500 to 2,000 tinting machines a year. We add about 3,000 outlets a year. We are pretty much on track on that journey. Our endeavor was to move to 5,500 towns. We've crossed that. Now our intent is to get to 6,000 towns. We've got a 2-year target of reaching about 8,000 towns. Yeah, we've added coverage in almost about 155 districts in the country. And really, those are the metrics that we are chasing and targeting on the paints part of the business.
All right. Rajiv, always a pleasure speaking with you. Wish you good luck for the strategy that you have. And we will keep having these conversations every quarter as well. With that, we are out of time on this edition of Chartbusters, but you stay tuned to CNBC-TV18. Trading Hour comes up next.